Over the weekend, two leaders opposed to several measures amid the Rehabilitating Europe won national elections in France and in Germany.
That's right. Now, economic experts in the U.S. are concerned, but why? Here to break it down, our 23 ABC financial expert, Andy Barkate. Good morning.
Good morning, you two.
Bonjour. Is that right? We started.
That's one of the countries that are having a few problems
France.
over there.
Yeah, we were talking about it yesterday, right here on the show, the new president and whatnot, and a lot of concern about where they're going right now.
Right.
I mean, right after it happened, we got the news alerts that flashed up down here about the European Union. We can always tell when those come up. EU, it's always talking about that and their financial status. Where is it right now, and where might it go?
Where is it right now? They're sitting there trying to figure out where these people may come in.
Okay.
And we all saw the trouble that all these austerity measures caused in Europe last summer.
Right.
With the riots in Europe, the riots in Greece, which were very heavily televised. It's all about being able to pay your bills. And having these bond issues that are being consistently brought out continue to be paid back. And that's what's been somewhat thrown up in the air. Are these new leaders or these new governments, when they come in, are they going to adhere to these austerity measures that were so hard fought and won, or are they going to try to back off and reshape that whole conversation? And then again, it's about, can they continue to borrow? Because they need to continue to borrow to fund their economy, kind of like us.
Right.
So we look more creditworthy than a lot of those smaller European countries. And if that doesn't happen, is the word bankruptcy going to be thrown around, or default, which has been batted around the last 24 to 48 hours. Is that going to cause interest rates to go up and actually cause a situation that's already not good to get worse? And will it spill over here is the big question.
And let's talk a little bit about that, because a lot of people here in the U.S. are saying, okay, that's happening overseas, that's happening over there. How does it translate and affect us right here in the U.S.?
And that's a very fair question. Now, if you think about it, a lot of the companies here in the U.S., a lot of our big, large companies, Ford, IBM, Microsoft, all the autos for that matter, sell a lot of their products outside of our borders. They sell a lot of things overseas, mainly in Europe. Now, if Europe is in a recession, which it appears to be, are their sales going to come down? And then hence, if their sales come down, profits come down, stock prices fall. We all feel it that way.
Right.
And on top of that, what will these companies do to shore that up? Will they do things like lay people off? Salaries won't go up, raises may not happen. Things like that could occur, and that's what worries people over here. One of the things, anyway.
Yeah, well, exactly right. All right, Andy, thanks for the insight. Appreciate it this morning.
Thanks, guys.